How are you doing, sir?
I'm doing good, man. How are you?
Very good. I just got back off holiday, like, well, 2 o'clock this morning. It's like the evening now. So honestly, you take 1 week away in the space, and you've just lost. It's like that scene on Interstellar where he goes to a planet for like an hour, and it's been like 7 years on
Yeah,
planet Earth.
yeah.
So I'm catching up. But yeah, what about
It's,
yourself?
that's what happens is speed of light industry. You just get like dog years. You go away and time is skipped.
You guys must be busy. Is it
Yeah,
is it
very
is
busy.
it is it chaos, or is it kind of organized chaos?
Um, do you know what? I think if you'd have asked me a month ago, I would have just said chaos. Um, Now it feels more like organized chaos. The funnel of the things that are raining on us is getting less and less, and we know more what they are. So we're just whittling stuff down as we go to launch. But yeah, it's good.
Good stuff. Good stuff. Honestly, you have to kind of choose your words quite carefully in this current environment because you never know if you're jumping on with someone who's just lost their fucking full life savings or net worth, or if people are all right. It's honestly, it's
Yeah,
tough.
yeah, it's tough. Like it's one of those where um, I sort of caught paranoia earlier in the year. So um, when stuff started to unravel with Terra and then 3AC and everything, um, we kind of were very paranoid about having all our funds in a non-custodial wallet. We made sure we were in high quality stable coins. We made sure that we had pretty high security constraints. We were pretty disciplined about like where we chose to be building. So like then all these, I wasn't that surprised when things. I was surprised the specifics of things that unraveled, but I wasn't
Yeah.
surprised that things unraveled in the last few months because like the blow ups earlier in the year were so huge. I was actually surprised how relatively little we didn't go down.
Mm,
I thought we would have got really hammered then. And it's only like all these things unfolding with Genesis and FTX and other parties, all these lenders, BlockFi, etc., Voyager. You see it now and you're like, oh, of course, like here are all the problems that I was waiting for 6 months ago, but they didn't come. So yeah,
yeah.
luckily we're good. But as you said, it's very hard with people, right? Like if you go, yeah, we're fine, like everything's fine, that doesn't go over well. So we're trying to tread the path between we're optimistic about us and we feel sorry, for people that are suffering.
Yeah. So I suppose if just before we go any further, it'd be quite rude to not go into um topic of conversation. Should we just do high level of Vertex? I'm sure the conversation will lead further down the garden path, so to speak.
Yeah, basically our kind of strap line. We're trying to like make decentralized trading useful for everyone. So um, even a month ago, people were like, centralized exchanges are fine. Why do we need it to be better on
Oh,
decentralized? That argument now is kind of gone. And I think what we're trying to do is we're trying to build something where you can come and trade all your perps, all your spot, all non-custodial, but with the same like performance you get on a centralized exchange. So super fast, easy UX. Click on a button, the right thing happens, and you have your assets, and you're not panicking. Um, Lots and lots and lots of things we're doing around that, but that's basically it. Sort of all the benefits of DeFi, but on a more kind of slick UI UX experience.
yeah, because you tend to see kind of one or the other, and we've definitely seen, like, even if you're just looking at it from a speculator's perspective, anything to do with decentralized exchanges, decentralized perps, even like going further afield and looking at like self custody wallets that have tokens and things. As soon as this shit started hitting the fan, it was just like everything was catching a bid, and it was like,
Yeah,
how long? Like, it's obvious to like people who like doing this day in day out, but it's like how long and how many like warning signs do like the average user in the space need before they actually get their shit together. Like I actually have no use for a centralized exchange anymore. Like probably haven't for around 18 months. But at the same time, it's only becoming like apparent now that there are obviously trade-offs that you get, whether that comes down to like slippage, liquidity, performance, as you were saying, and like even just down to like UI, UX, and things like that. It's just completely. It feels like it's a little bit of an afterthought, particularly in the DeFi space.
Yeah, I mean, like this analogy gets used a lot in crypto, but I think it's a good one. It's like being early into the internet, right? And you're like, you know what it needs, and you know all the shit you want, and you know how it should work. But just like technology's iterative, it takes a while for smart people to figure out all the problems. You know, it's not one problem, it's like a layer and layer of problems we need to solve. And we'll get there. And like we see it with Vertex, you know, we are solving problems. Someone's going to come along and use some of the solutions we've come up with to go and solve other problems. And equally, we're using other people's solutions problems. And you just build up layers and layers of tech to the point where all this shit will just go away, all the centralized exchanges, and crypto will be all on chain, all self-custodied. But right now, it's pretty ugly. If you're like a normal person coming in, and I say to you, get a MetaMask wallet, use it, get some funds in it, go and trade. I mean, who hasn't had that first feeling of pressing the button on the MetaMask wallet and then just going, "Oh shit, I just lost all my money. All my money disappeared."
I'll never see that again.
Yeah, I remember distinctly, and it wasn't. You know, I think it was like I sent like $100 worth of tether or something.
Yeah. And
I pressed the button. It was like 2 years ago when Ethereum was really congested, and it took like half an hour to get there. and I just went, "Oh right, I just wasted $100. $100 just disappeared." And of course, it turned up eventually, and then I couldn't move it without spending $200 in gas fees, and I realized, like, fuck, this thing's super expensive. But you know, they fixed those issues, and it's just iterative, as I said.
That's definitely a rite of passage if you're around in the times. Like I've seen gas. I don't know what the hell it'll be. Been some stupid NFT mint or something like where gas is poking above like $1,000 and stuff like that. It's just in 5-10 years time we'll talk about stuff like this, or even talk about, oh, do you remember when we used to use MetaMask? And everyone will just be like, the people who are coming through now, or like maybe 5-10 years time, who are using it like day and day, they'll just be like, how the fuck did you even operate? Like, how did you even do it? Like, think back to like the LimeWire days.
Yeah, and you know, it's crazy how long you'd wait for things to get confirmed and come. You know, like, you know, I know you're not in the UK, but you're obviously from the UK. I'm from the UK, and people say like, "Oh, crypto's going to solve payment problems." In the UK, like, I can on my phone press a button from one account to the other, and it literally pops up within 1 second. And until the UI UX for crypto matches that, like, normal people aren't going to care. If payments is a solution that crypto is going to be, then everything needs to move forward. And we're getting there, right, with roll-ups and even block times on Ethereum, you know, gas costs. Everything's going the right direction. It's just we're super early. It's easy to forget how early you are in this thing.
Yeah, you definitely get you're just in an echo chamber, aren't you? And you get these blinkers on, and just because you're like balls deep in the latest DeFi protocol that has about 6 different onion layers on top of it, that's all plugged into the full matrix. It's like Tom, Dick, and Harry on the street. They've probably bought Bitcoin off Coinbase. They're like, that's 90% of people, 95% of people, you know. Yeah.
And even the people that are balls deep in the space, I think when I started, because I was trading, my background's in trading, and like I was trading crypto stuff in like 16, 17, and then I dropped off a bit in 18. I was doing it I was working at a hedge fund and then I was trading on the side. And so I was doing like BitMEX cash and carry and stuff like that, which is quite similar to shit you would do in normal finance. So it was like very easy to understand. And then I came back and in like late 19, early 20, and people were starting to talk about DeFi and AMMs, and that was becoming more popularized and yield farming. And I went, the amount of things I Googled and every explanation was so bad. I think the quality of explanation has gone up so much since then. Because I would read these things and be like, what is like, I've been trading complex derivatives for like 15 years, and I could not understand these things. I was like, either I'm an idiot or the person that wrote this is an idiot. And the thing that turned out was a lot of the people who were writing about things were idiots. But the quality has just soared. So now you go and read about AMMs, and I think the literature's really good now. People have really like can explain this shit. But yeah, it's mad. You've got these like new innovations, and then people that don't understand them writing about them, and then they're building on it. And as you said, you end this like onion layered thing with 6 layers of leverage and token farming, and you're like, fuck, what is it? So yeah, you are in a bubble, yeah. But you know, part of the excitement. That's part of how you make money.
100%. Yeah, some of those early articles you were reading might have been some of mine when I was at the point of early DeFi summer when I was literally figuring everything out. I can remember thinking to myself, I was like, look, no one has a fucking clue what's going on here. Like no one, like everyone's learning on the job. So all I need to know is be like one step ahead of the guy who's reading it. It was like, because it was such a new, obviously like the financial aspects of it, that's kind of tried and tested. But when you get down to the nitty gritty and the tech side of it, and particularly the tokenomics thrown in there and shit like that, it was like, I just need to be one step ahead. But now obviously looking back, it's like, Jesus Christ, I didn't necessarily know what I was talking about at the time, but it's all the fun of it, I suppose.
Yeah, it's funny because like I came in, I read all this stuff about AMMs, and then every article's like, oh, impermanent loss. And I was like, I can't get my head around what are they. So I did like a spreadsheet, and I actually like got the maths, ripped it apart. I did like a whole thing of like, how much impermanent loss is there? Like stuff moves, what happens? And I was like, oh, it's kind of a like in option terms we call it gamma. I was like,
yeah,
oh, it's just negative gamma. Okay, it's actually not that bad. Like it's not that extreme. And then at that time, every yield farm, because everyone knew about impermanent loss, they're like tokens you'd get thrown to farm. Even like blue chip pairs was astronomical. I was like, okay, so this is just free money, right? Got it. And it was just like, I'm just gonna yield farm all this. And then I started doing like leverage yield farm. I was borrowing money to yield farm. And then at a point I was just like, I think I got rugged on I think I was doing some stuff on BSC, and I think I'd made like, I was just tooling around, but I think I'd made like 30 grand. And then I think overnight I looked at my portfolio. I had one of I can't remember what tracker I was using. It's like, I think it's broken. It's like down 30 grand. What happened? And then like one of these things had got rugged. I was like, oh right, yeah, that makes sense. High reward, high risk. Play. It's a bit of an emotional roller coaster, but what are you gonna do?
Well, you couldn't be a crypto founder without experiencing something like that. I see a lot of people like first time founders, not even first time kind of crypto founders and stuff, and you can tell they've came in. They're definitely not doing this shit day in day out, but it's and you can kind of see who's been rugged and who hasn't, particularly the way they kind of speak about the space. But I want my founder to have been rugged hard. Like I want them to have suffered.
I've been rugged a number of times. The other one was my neighbor is an interesting guy. He's involved in tech, but other kinds of tech. And he, long story short, someone had told him about some NFT mint, and NFTs were fucking hot. And to be honest, I'd not really been involved. I was in the it's just a fucking JPEG crowd at that point.
Same.
And so he's like, "Oh, come on, we should do this." And I'm like, "Okay." And then he was fucking about and had struggled to get some ETH and blah blah blah. He's like, "Oh, I need I'll mint 3 of these things, but I need 2 ETH to do." It was 1.5 ETH. It was half an ETH per thing, and then gas fees and blah blah blah. So I'm like, sure. So I send him 2 ETH from my portfolio because I didn't want to sit there pressing a button. So I said, get one for me, get one for you, and we'll just sell one, and I'll split the profit with you. He's like, cool. I was like, that's a good deal. I'm lazy. So then the next day, I'm like, so did we get some on the mint? He's like, no, mate. I'm like, okay, no problem. Just send it back. He's like, yeah. And he'd gone on the Discord and been like,
fucking hell.
What's fucking happening? And someone messaged him and they were like, here's the link, press this button. He fucking pressed the button and it just drained his wallet. He's like, yeah, so, and ETH was about, I don't know, I think it was about $3,000 at the time. I was like, so this $6,000, what are we going to do about that? So I think we ended up sharing the loss. It was pretty horrible. So,
God. Those the NFT guys, they just seem to be such an easy target. If there was there should be a community spreadsheet somewhere of all the Bored Ape Yacht Club holders who've been hacked or sent people their seed phrase or something. Because I mean, it's just every week.
It's brutal. And the problem is they target the people that are just most likely to if you're a cynic, I would say actually I've become much more receptive and I actually kind of get NFTs now, right? But I used to be super cynical. If you're a hard cynic, you're going to be cynical about most things, right? If you're an NFT believer, you are naturally a bit of a dreamer, a bit of an optimist. You're looking for yeah, everyone loves everyone. Let's go and get some community going, whatever it is. And then some fucker on the internet just gets you in a corner and basically gives you a shoeing and takes your precious JPEG. That is just brutal. I mean, it's like mugging a kid. It's horrible.
One thing they seem to now what you've just said about the NFT crowd, I've always thought that obviously if you're going into a launch or you're building up a bit of hype around a project, you want as many eyes on as possible and to build some form of community. I've always thought, one, I'm looking at it 2 ways now, what you just said. I don't know if the people who are building the communities for the NFT projects are good, or they're kind of shooting fish in a barrel and the community is just more receptive to those who are kind of battle hardened from the DeFi space and things like that. Because I do think NFT projects tend to have a better and easier ride with regards to kind of community building.
Yeah, it's interesting, isn't it? I think, as I said, I was super skeptical on NFTs, right? And then we've got an investor in the project, is Collab Plus, and Darius from Collab Plus is huge in the NFT space. And I think what I've realized is NFT is a piece of paper, right? It can be anything. NFT is just a container. I think the problem is most NFT as we think about it is art. And then most of that art, if we're brutally honest, is kind of shit. But some of it's really good. and some of it's great. And like an NFT can be a great way of indicating community, right? So like, it's something we've looked at. You know, like how do you denote membership of a community, an interest in Vertex, people that want to participate in our DAO? Like an NFT is quite a good way to do that, but we're not trying to generate cash from it is the difference, I guess. Like if you're just depends on your intention, right? I think some NFT projects are run really well and they do a great job. But then the problem is those ones have had such astronomical growth in value that then people are naturally looking for the next free bit of money. And so they just hop into things that are run by people that don't care about the community. So you kind of, so that's all crypto, I guess, is both ends of that scale. You got people genuinely trying to build something, and then you got people that are just doing something to try and be extractive.
Yeah, what you tend to see is it's very transparent as well. So for any kind of new participants listening, if a project's kind of all out of ideas and they start launching an NFT project for some weird reason, then just run a mile.
Yeah. I'm thinking of one project in particular. I'm not going to name any names, but yes, I know exactly what you're talking about.
Like fair enough. If like I do like the idea for people who do a lot of heavy lifting in a community for a DeFi protocol, where maybe it is those kind of power users, so to speak, or if there was any kind of way to, I don't know, lay claim to additional boosted rewards for a specific NFT and stuff. But I completely agree with what you're saying is if you've got a well working product with true product market fit and you are profitable on your underlying protocol, there's no need to go and kind of effectively do a public raise through an NFT mint. It doesn't necessarily sit well with me, that.
Yeah, I think, to be honest, my understanding, and I'm not deep in the NFT space, but my understanding is a lot of the mints that are out now are becoming free on resale value, i.e., if the community and the project is growing, then the founding team makes more cash or the DAO gets more cash, depending on how they've structured it. If it doesn't grow, then they make nothing. That seems fairer to me, like a good way of doing it. But I don't know. We'll see. I go up and down about NFTs. It doesn't seem to have found a killer use case yet. Everyone talks about gaming and stuff, but we'll see.
Yeah. So I was looking on the website and the testnet for Vertex earlier. You seem to have accomplished something that I touched upon earlier, that the UI and the UX seems extremely intuitive and familiar. I don't know how. I think I know the answer to this, but has that been like a really conscious decision to make sure that's implemented as in a familiar way as physically possible?
There's two things. One, one, yes, kind of. I think what we wanted was that it would be familiar, but that we didn't want to just copy. So it's a bit difficult because when you ask a user what they want, I would say 95% of users will just tell you that they want what they're familiar with. So if they're a Binance user, they'll tell you that the Binance interface is the best. If they're a GMX user, they'll tell you GMX interface is the best, and so forth. In truth, what we did was, and actually we're going to do a lot of changes to our UI. Like our product guy has done so much work on this recently, and we're really excited about what the UI, I personally am very excited about what it will look like. he's done a great job of synthesizing and taking what we think are the best of all those and making a really clean experience for people. So it's, yeah, I think it's really hard to be truly innovative. So again, we're iterating on the work of others, you know. And so my hope is that we'll end up with something that looks and feels familiar, but is maybe better than what you've used before.
I think once you're live as well, and you get those kind of power users on the platform, I think that's when you tend to see where the iterations come from, because the people who are using it day in, day out, it's just like, this would be really handy. This is a little bit annoying. Have you thought about this? Have you thought about that? Like, as I said, testnet and just looking, like, briefly flicking through a website, it's all well and good, but until you start getting your hands dirty with protocol, I think that's when you really start, just veering off from like the original iteration and starting to get really like innovative with the UI and things like that.
Yeah.
But yeah, it looks great though. It looks.
Oh, thank you. Yeah, like look, even testnet's been amazing for that. To be honest, people are very opinionated, and anyone that's worked in a customer service industry will tell you that sometimes it's tough to take loads and loads of feedback from lots of people at once. But it's been genuinely helpful, and the version we're working on right now, we think will benefit a lot from that. And as you said, once people have got actual money on the platform and they're trading, that'll be next step up again. I'm sure we'll be forced to like iterate and improve again.
Was choosing an order book a difficult decision, or from you, where did that stem from? Was it something that you've carried from previous traditional markets, or have you always kind of thought that that's the way that DeFi will end up in the long run? Or because obviously everyone naturally goes towards it, AMM, don't they? So
yeah, I think it's really interesting because if you look at most crypto projects, it's amazing how few of the people building exchanges actually have a background in trading or finance. And so they kind of have their own ideas, but they kind of got fixed views. I think for us, there's really two sources of like revenue in crypto, right? Of things that bring money in currently. One is retail traders who generally get very high fees and poor liquidity, relatively speaking. And then you've got market makers who get very low fees, but they don't get active revenue and they provide liquidity. And then in the middle, exchanges have kind of extracted from both sides, right? Now, DEXs were an attempt to counter that. So they cut market makers out and they just said, okay, we'll just have P versus P, retail users, right? But what happened was the liquidity that market makers provided just disappeared. And if you ask any standard DEX running an AMM, they'll tell you that their biggest problem is how do we improve the liquidity on chain so that people will come and trade in our market. And all the advances and changes and compromises people have made with the tech around AMMs has been some expression of trying to improve that problem. So, you look at Uniswap with their V3, concentrated liquidity, they're trying to make it more capital efficient by making the bands tighter, so you're not putting liquidity everywhere. If you look at GMX, the GLP model, they're using an Oracle and user liquidity as a way of providing a kind of common reference price, but fees are quite high and it's capital constrained. I'm trying to think of other models. Curve have done a kind of amplification model, but then they've done that really only works well for stablecoins. Each one of these is a compromise. Each one of these is a different way of doing things. But, go to like the most successful one is UniV3. And really, UniV3, if you concentrate the liquidity down to an infinitesimal point, what do you end up with? It's just a limit order.
Mm-hmm.
Right? There's a reason that traditional financial markets use order books. And it's because it's the best way to express exactly what you want to do in the most efficient way possible. And so we said, okay, well, look, that's the most efficient way. All market makers are already set up to use that and do that. If we want to have really good liquidity, what we need is to make trading cheaper for retail. So we'll have very cheap fees. And we need to make the technology easy for market makers. So we need an order book. So that when people come and trade, liquidity is there available to go. Now, good thing with us is if you're a retail user and you want to be a liquidity provider, we still have AMMs. And you can still put AMMs into our order book. They will be part of the liquidity and you can sort of harvest that up and down. But it just gives more options, gives more flexibility. Sorry, that was a long answer, but I think it's kind of an important thing to talk about.
No, it's great. As you say, yeah, the UniV3 just looks like it's edging ever closer to trying to be anything but an AMM at the minute, so which is quite funny. But and what we were saying earlier about the early yield farming days, it's those AMMs got effectively rented liquidity, whilst the customer acquisition cost of their token emissions was enough to offset any impermanent loss or to be attractive, or because we're doing some work with Tapioca DAO, and like Matt was bringing up some of the statistics about kind of yield farms and airdrops and things like that. Everyone knows what happens. The mercenary capital comes in, rewards are high, and as soon as those start dwindling, liquidity goes elsewhere, and they renders the protocol completely illiquid and completely inefficient. So need to iterate. I think you guys are doing it. Is what does it look like for let's say like a traditional market maker to come on to Vertex? Then do they need to do anything with like their bots? Is it set up in like a friendly environment to allow that to happen? Because naturally they wouldn't be sat manually making markets, or I could be completely wrong there, but it seemed a little bit tedious for them.
So the way we're set up is we have a sequencer for our contracts, which basically means that we run the order book through the sequencer. So you sign your orders, they're able to be traded there. It's basically like we've accelerated all the things that happen on chain to a very fast kind of sub-second latency. But what that means is everything's safe, everything clears on chain, but from a automated trader standpoint, they just have one endpoint they have to hit. They connect to that. Their bots show prices. People trade, and they can use the models that they use on centralized exchanges. They can just put that straight onto Vertex's order book for liquidity. So the benefit, if you're a market maker, the only work you really have to do is the initial lift to connect to our API. So we tried to make that as easy as possible and as similar to other APIs as possible, so it's relatively familiar, just to reduce friction. But once you've done that work, and like depending on the firm, we've been quoted 1 to 4 weeks it would take to do that, depending, 4 weeks is long and part-time. No one's working on that hard. A week is they put headcount on it and they do it quite quickly and they test it. But once, we've got one guy we've been dealing with, he span up a bot and started putting liquidity on our test net. I think it literally took him a day.
Sure.
So the benefit of that is, like, you don't have to set up a node. You're not trying to optimize for MEV. You're not worried about, but equally, you're not worried about custody as you would be on a centralized exchange, and you know exactly what's happening with your assets because you see it all clear on chain. So, like, it's interesting. It seems to chime with people.
Yeah, absolutely. I was speaking to my friend Squirrel from Arrakis, and he was just explaining this whole thing to me. He's like, Uniswap, even in its V3 form, is just a complete nightmare for people who are wanting to perform similar market making activities on chain as they would on Binance or wherever people trade now. There's only like one exchange left, isn't there? So, but like with this, that's why I wanted to bring it up, is just because I think for a lot of people listening, particularly like kind of new folks that came in with retail participants, they might have this kind of image in their head that some market making firms sat literally plugging bids and asks into like an order book manually on the other end. But like, I think that in and of itself is like a huge USB for a protocol that will be completely overlooked by like your average retail user, I think.
Yeah, I think it's fair enough. Like, it's easy to dismiss retail sometimes, but sometimes you just have to respect it. And the main feedback is people just want it to work. I don't care. Just make it move well and have good liquidity and low fees. And so that's been like what we tried to do for retail. They don't need to know about how we deal with market makers, really. That's more for sort of people that are more down the rabbit hole like yourself. Standard retail is good price, good user experience. Does it feel safe? Cool. Let's go for it.
Yeah, I agree. What so with the money markets, how is this going to fit in, and what does it serve a function as liquidity or?
Yeah, it's a good question. So I think in reality, to start with, for most users, what it'll probably mean is they can deposit BTC, ETH, a few different stable coins, and use them as collateral to trade our perp markets. I think for market makers, what it will mean is they'll have flexibility of assets that they can borrow and lend for trading spot, as well as the first use case. I think that, like, borrow lend function, the money markets will become way more interesting when we start to add lots of different assets for spot and the universe expands. I think in our first instance, it really mostly functions as a multi-collateral kind of thing where you can see instantly what it costs you to do that. And that's probably the biggest use. But it will become way more useful when we go into having lots and lots of different tokens listed.
All right. Will that be the function to effectively for your spot margin then? Will that work as like a looping function on the lending and borrowing, or is that?
Yeah, so you can trade spot margin spot on the platform. I think when we talk to users, for most of them, I think perps make more sense for them. Actually, margin spot's kind of a weird product in the middle, right? People either want to do spot usually, or they want to do perp. So it does facilitate that. I think in reality, the people that will use the margin spot the most initially will be the market makers and people that are a little bit more sort of looking for arbitrages and things like that, where they're trying to arb versus ARB perps and trade all that sort of stuff. For general retail, I suspect it won't be a product they use that much.
So what kind of assets do you? Well, twofold actually. The question: what assets do you envisage being live from basically mainnet going live, and what would the kind of process be for more exotic listings? Is it just purely down to a demand, liquidity, or even you could even take it down the rabbit hole of could you even use Vertex as a launch pad or like a exchange listing platform? You know?
Yeah, it's a really interesting, good question, and we're sort of asking ourselves that question right now. I think initial roadmap, we are thinking about launch will be very conservative. We'll just have like BTC and ETH and a couple of stable coins, as I said. And then the aim in the first 3 to 6 months is to up the number of listings of perps. So perps is the most obvious products. We're on Arbitrum. We want to get up to, I would say, 20 different perp markets. So similar sort of range of perpetual markets you could trade as, say, DYDX. And then ultimately, if we want to do more spot products, because we're on an L2, it's sort of interesting. Unless Arbitrum absolutely explodes, a lot of the value will come off it being a sort of derivative of Ethereum. And obviously, there are like a shit ton of tokens listed on Ethereum on the L1. But the bridging process from Ethereum to Arbitrum and back again is a little bit of a sort of blocker for people.
Yeah.
So I think if we want to do lots and lots of different spot markets, and if we want to have that kind of launch pad kind of thing that you're talking about, we're going to need to do some work probably on going multi-chain. And that's like a kind of phase 2, phase 3 thing that we have some ideas how we do it, but we haven't spent loads of time working on it because we're so busy getting to launch.
Yeah, that makes a lot of sense. Would there be any room for? I don't know who I might have spoke about on your team before, but definitely starting to see a rise of. I don't necessarily think they'll be challenging USD denominated stables, but I think a platform like yourselves, there aren't traditionally any kind of forex markets, or if people want to trade in, trade out of the likes of like GMO. I've got GN. I know there's like a Euro T and things like that as well. Would you entertain that, or do you think it's a bit far out for DeFi forex to be actually crossing over?
I think the problem with DeFi forex is the like scalability of the underlying tokens. Like, I actually believe there's demand for that. You know, there is probably demand in Japan for yen denominated DeFi. Similar thing in Euroland, Switzerland, whatever. The problem is, like, you know, I used to work as an FX trader back in the day. That was where I started my. If you want to have a successful stable coin, you need sort of minimum $1 billion worth of liquidity in that underlying coin, and the hump to get to adoption is just big. You know, I think until, say, regulators are very friendly to the idea of a stable coin in Japan or Australia or wherever it is, I just can't see it happening. Like $1 billion it's not that big in FX terms, like as liquidity.
Oh God, yeah, exactly.
But in crypto, if you said $1 billion stable coin, you'd be really impressed. If I said, "Oh, I was here and here's Darius and he runs a Aussie stablecoin project with $1 billion USD value in it," you'd be really impressed, right? And in truth, that's like the bare minimum for something to be credible.
Yeah, that makes a lot of sense. Are we allowed to talk about token?
I can. I might knock back on certain things. What would you like to know?
Well, I won't go down the road that I know you might knock me back on. What will the kind of function and utility be? What's the kind of landscape there?
The token will have various utility to it. So currently the plan is it will be used for governance. It will be used for paying fees potentially. It would be used for capturing some of the revenue of the platform. It would be used for a whole bunch of stuff. The idea is like the more committed you are to the kind of ecosystem, and that is expressed through the use of this voucher, which is the token, right? We say like, here's a denomination of who is participating in the ecosystem. The more you participate, the more you do, the more of the kind of right to guide the ecosystem you will get, and therefore some benefits will probably redirect to you in accordance with the work you've done. So it's kind of it's that. I mean, I suspect the question on your tongue was when airdrop, what, when token. I think like a lot of people have asked us if testnet's incentivized, and the answer is no. I can be very clear. The testnet is not incentivized. I keep saying this, but like
you have to reset.
Yeah, I'll just restate. You could put that as the tagline for this podcast if you like. But but there will be an airdrop at some point, and the airdrop will be based on how much have people traded on the platform, what have they done, what are they using the platform for, etc. Because ultimately, we want tokens to go to people that are participating in our ecosystem.
Mm-hmm. Yeah. So how is the kind of community participation been? Obviously, there was like a little bit of history prior to choosing to go to Arbitrum. Has the community just been as strong as ever? How did that whole thing play out?
Yeah, look, I think it's a lesson in how fickle crypto is.
Really?
So we went sort of heads down builder mode in like June. Kind of retreated to the cabin in the woods. We restructured the team. We went down to a real like core team of people, and then we slowly like built that back up. And we really only raised our head above the parapet, I don't know, 2 months ago, 10 weeks ago, something like that. And in all honesty, it was kind of slow going. And then the response in the last month, I think the lesson has been like, don't cry for attention too much until you've got something to show people.
Yeah.
The space is so full of people promising things and not delivering that it's better to just be quiet. Even if people get a bit frustrated with you, like, what are you doing? Give us something. Because then when you deliver, then they're really happy. Because so many projects just soft rug. Just disappear. They accept money. They may take it and they build nothing or whatever. You get a lot of credibility just by building. So we're just focusing on that. And I have an amazing guy that does comms. He does a great job of writing threads, dealing with the community, putting me on things like this. I get to speak to people like yourself and kind of preach about what we're doing. And yeah, seems to chime. And I've been lucky. I got to meet with some. I went on the Tally Ho community call. Are you familiar with Tally Ho?
I'm not actually. No, it's a great name.
Mate, honestly, you should look them up. They're a community-run wallet, and their community call was like a rave. It was unbelievable. They had like house music going beforehand. Like, I've done a bunch of things. I thought it was going to be a Discord call with like 100 people on it. There were like 3,000 people on the call. It was mad.
I'll
Like,
have to go check them out.
yeah, you have to check it out. Like, honestly, there's just little pockets like that. And what was obvious to me was they built a community because they've done a great job of building. They've actually done stuff. They've done the work. And there are still plenty of projects out there that are just doing the work. And if you can do the work, people respond. And that's what we've been seeing is we put testnet out, people see the changes, they see us fixing bugs, they see stuff getting better. We're getting more respect. And you see it in like our Twitter numbers have suddenly just gone crazy. Members has gone crazy. The quality of the dialogue has gone up. We've had people engage. It's all that has just gone up and up and up. But because we actually delivered something, and we think we can keep on.
Yeah, that's really important, isn't it? Because you're getting that kind of appreciation based on merit and kind of delivering and under promising and over delivering at the same time, as opposed to you guys could quite easily do all these vanity market like metrics and all that, and you could very easily play that game, but fine well the type of clientele that's going to attract. And I don't think a project with this much potential deserves that kind of tourist mentality that come along for the ride. So I think the way that you're going about it is definitely one of the more professional I've seen, for sure.
Thanks, man. I mean, look, I'm very honest with everyone that asks me about the platform. We have our fair share of airdrop hunters and bots, and for sure, right? But we're doing our best to just kind of make their life a bit miserable and unrewarding, and just focus on the people who are actually engaging properly. So, see where that takes us.
Yeah. So we're getting close to the top of the hour. Is there anything you want people to do? Do you want them to go and try the testnet? Do you want them to go and have a look at the Discord? Any mediums or articles or anything that you want them to go and do? Or is like where's best to find you guys at the minute? And when should they be looking out for some announcements?
I think the best thing, the laziest and most high impact thing people can do is probably just follow us on Twitter, because we put out everything there and very communicative there. I think if they really want to get in the weeds, go and look at our Medium, go and look at blogs. We're starting to post. Have a look at our testnet, interact with it, keep an eye on it, because there'll be a big flip in the UI as we go through January.
Okay.
And then we're aiming for probably the front end. We'll have a soft launch with market makers. We're hoping in January, but probably we won't launch our front end with folks until maybe mid-Feb, end of Feb. So getting on it and getting familiar with it in maybe mid to late January with the testnet. If you're super lazy, if you're like one of those that likes to be on the bleeding edge, come and look at it now and see what we've done in a month, and I think you'd be super impressed. But number one thing is follow us on Twitter.
Awesome. Just forgot to ask one question before we wrap up. Is where do you foresee initial liquidity coming in, particularly on the order book? Obviously, that's naturally going to be the biggest sticking point or hurdle or challenge. Is there anything kind of lined up there? You did allude to a little bit there, but it'd be great to hear from the source.
Yeah, so it's two things. One is we have, this is all public information, but we have a number of large market making firms that participated in our round. They have been good partners to us and have promised support in that regard. So that gives us instant kind of access to liquidity there. The other piece of it is we will have a market maker program. So similar to DYDX, there's a kind of token program we'll have where people get rewarded for putting liquidity on the books. And there'll be kind of, when we do a token drop, they will be part of that community that gets part of the token. So the whole idea is those that participate most and help the growth of the program and the protocol will be those that have the kind of most sway over governance in the early days. And then obviously, like, as the protocol grows and time evolves, people can give up tokens, they can sell it, whatever, but it will accrue into the hands of the people that are doing the most for the community. And that's kind of how we want it to be.
Makes a lot of sense. Good plan. Well, Darius, thanks very much. Anyone listening, by the time this comes out, there should be an article on our website as well. We'll make sure we make a big song and dance about that, about Vertex. But yeah, thanks again for joining us. Appreciate it. Imagine it's, as you say, it's organized chaos at Vertex at the minute. So thanks for taking the time.
It's my pleasure, man. Thanks for having me.
Anytime. Right. Thanks, everyone. Speak soon.